Most people think investing is just buying stocks and hoping they go up. But the truth is, investing changes completely depending on how much capital you control. The strategies change, the risks change, the opportunities change. Even the way you think changes. A beginner investor and a billionaire investor may both technically invest money, but they are operating in completely different worlds. So today, let's walk through the 8 levels of investing, from someone opening their very first brokerage account, all the way to the people moving billions and influencing entire markets. And somewhere on this ladder is probably the level you're at right now. Level 1, the beginner investor. This is where almost everyone starts. You open your first investment account. At first, it feels exciting, but also confusing. Candlestick charts, green numbers, red numbers, thousands of companies. You deposit your first few $100s, and suddenly the market feels real. For the first time, you stop looking at companies only as brands. Now, you see them as businesses. You begin asking, how does this company make money? Why do customers keep buying from them? What makes them grow? Why do some companies survive for decades while others disappear? At this level, the money itself isn't the important part. The education is. Because the first thing investing teaches you is patience. You slowly realize investing is less about reacting and more about staying invested long enough for time to work. And once that idea clicks, you move to level 2. Level 2, the consistent retail investor. This is where investing becomes a system. You stop investing randomly and start contributing consistently. Every month, $200, $500, maybe $1,000. Not depending on emotions, not depending on headlines, just consistency. You begin building real structure. Index funds, ETFs, diversified exposure, long-term positions. You also experience your first real market drop. And emotionally, this is a huge test. Because now your portfolio is falling, while your emotions are screaming to stop. But this is where disciplined investors separate themselves from emotional ones. You begin understanding. Volatility is normal. The market moves, fear moves, prices move. But long-term investing requires surviving emotionally long enough to benefit financially later in life. This is the stage where habits matter more than intelligence. Level 3, the compounding investor. Then something important happens. Your portfolio reaches a size where market movement actually feels meaningful. Maybe $50,000, $100,000, or more. Now a small percentage move suddenly equals real money. And for the first time, you experience compounding emotionally, not just mathematically. You realize your money is beginning to help grow itself. Your strategy becomes more intentional. You rebalance. You manage allocation percentages. You think about taxes. You focus on long-term efficiency instead of excitement. And psychologically, this stage changes people. Because now, wealth no longer feels theoretical. It feels possible. Level 4, the advanced investor. At this stage, optimization becomes important. Your portfolio is now large enough that even small improvements create meaningful results. You stop asking, what stock should I buy? And start asking, how much risk am I taking? How tax efficient is my strategy? How resilient is my portfolio during downturns? What happens during inflation or recession? Diversification becomes deeper. You begin adding fixed income, real estate exposure, alternative assets, more structured allocation models. Avoiding catastrophic mistakes becomes just as important as generating returns. Because at higher levels of wealth, losing less matters enormously. Level 5, the high net worth investor. Crossing into seven figures changes access completely. Now, opportunities begin appearing that most retail investors never even see. Private investments, real estate syndications, private equity, venture capital, exclusive funds. At this level, money doesn't just buy assets, it buys access. You begin working with tax professionals, financial strategists, estate planners, private banking networks. And the game changes from how do I grow money to how do I structure wealth efficiently? Because now complexity increases alongside opportunity. Level 6, the professional investor. This is where investing becomes an actual operation. Your capital may now be in the tens of millions. At this scale, every decision matters. Every percentage matters. Every risk matters. You begin operating more like a portfolio manager than an individual investor. Your portfolio becomes an ecosystem. Equities for growth, real estate for income, private investments for upside, fixed income for stability. Performance is measured professionally. Benchmarks matter. Risk management matters. Capital preservation matters. At this level, consistency becomes more valuable than huge wins because recovering from major losses becomes harder as scale increases. Level 7, the institutional investor. Now the scale becomes enormous. Hundreds of millions, sometimes billions. At this level, investing stops being personal. It becomes strategic capital allocation. You are no longer selecting individual stocks casually. You are deciding which industries receive capital, which funds receive backing, which sectors expand. Liquidity becomes a challenge. Moving large amounts of money can literally impact markets. Relationships become critical. Hedge funds, private equity firms, institutional managers, global networks. And this is where investing quietly transforms into influence. Because when institutions allocate capital, entire markets react. Level 8, the billionaire investor. At the highest level, investing is no longer about participating in the economy. It's about shaping it. Billionaire investors don't simply buy shares. They buy positions powerful enough to influence companies directly. Their investments can change leadership, reshape industries, fund innovation, impact global markets. Deals happen privately. Strategies are negotiated directly. Access becomes almost unlimited. And at this level, capital behaves differently. Because once wealth reaches extreme scale, the market starts reacting to you, not the other way around. Final thought. Most people think investing is only about money. But every level of investing changes something deeper, the way you think. At first, you obsess over stock prices. Then you focus on systems, then risk, then optimization, then preservation, then influence. And the interesting part is this. Every billionaire investor once started exactly where beginners start. Confused, uncertain, and staring at a small account balance, wondering if any of this would actually matter. The difference is that they stayed in the game long enough to climb the ladder.